Hey traders, checking in on the stock market today. So EV names started to show us some relative strength compared to QQQ. It's been a while since we've seen that. Last time we saw it was on the NIO oversold bounce that I traded, and today it was the Tesla bounce that I traded. We'll go over that in a review. And we're seeing what, in my opinion, is the QQQ bulls making an attempt here to show up. And the next 2 days, keeping in mind Friday there's no trading, it's going to be very key for these bulls to start proving some bounce follow through. The S&P 500 is waiting for the tech sector to push it to an all-time high. Question is whether we follow through or not. I'll show you the key resistance level that I'm keeping an eye on. So starting off with the S&P 500, this is the futures chart. We've got the all-time high. We've got a pullback. We've got the inability to break the all-time high, and now a 12-hour bull flag attempt. This is the psychology of a cup and handle pattern. So we can definitely see a bull break to all-time highs, but the only way it's going to see follow through, in my opinion, is if the tech sector bulls and QQQ are participating in that rally. So that's something I'm keeping an eye on in the next 2 days. Keeping in mind we've got 2 trading days left. So if we get that bull break and follow through, obviously bulls keep their complete control. If we reject from it and lose the pattern of a higher low each day, if this inside bar today breaks bearish, then it's a double top, and we're looking at the low of last week as a very key support level in the short term. So for SPY, double top 398.12, 396.75, and if the inside bar breaks bearish, it's a much more convincing rejection that has us looking to 383.90 key support, and of course if it breaks bullish, new all-time highs. So QQQ here has had my attention obviously for a very long time, but it really has my attention the next 2 days. We had a break of the low of yesterday with no bear follow through. So that has me starting to watch the other direction. What happened the last time our daily lower high was set? So daily lower high is now set, 317 high of yesterday, because we broke that low of yesterday. The last time that happened, the daily lower high was set at 321.09. Look at that candle. That is a very convincing bearish candle for a daily lower high being set. We are not seeing that candle today. It's a very different kind of candle. So if the bulls break that high of 317, for me, that'll be a weekly higher low starting to shape up, and we'll be looking right back up at the high. There's 2 more resistance levels, 321.09 and then 324.20, but it would be the first notable shift in momentum towards the bulls that we've seen since we topped out on the bounce. So that would be notable to me, and that's what we're watching. If the low today breaks, the bears keep complete control. And I will lighten up on my short, which I've been holding through this daily consolidation, but I will exit that if we get a bull break over 317, or at least significantly reduce it. IWM, daily higher low trying to be set. If the bulls can break 220.93, it's a confirmed daily trend change. And that confirmed daily trend change would then give the bulls a whole lot more confidence that this double bottom of support can hold. And we would then zoom out and we would scout a weekly lower high compared to the all-time high, and we would still have to keep an eye out for the potential of a head and shoulders, but it would at least be a clear defense of support with some bull follow through. The defense and decent bounce already took place, but if we confirm the trend change, it shows you the follow through of sustained buying after that initial bounce. The financial sector is still just fine on the weekly chart. It's a bull flag. All of the laggard sectors that are correlating to it are fine on the weekly time frame. Hotels looking for a weekly higher low. Casinos trying to set a weekly higher low. Airliners, weekly higher low watch. You get the idea. So XLF looking back at the all-time high. So we got our low of consolidation, high of the bounce, higher low. We broke resistance. And really, aside from 34.47, it's just the all-time high of 35.29. At this point, bigger picture, we have to break 33 if the bears are going to prove anything to us. If 33 is holding, the bulls are keeping longer-term control. Healthcare pulling back today after leading the way for the bulls the last couple days. So bulls taking a breather. They've earned it. Anything above 113.35 will be a daily higher low, and the bulls will need to regain the hourly trend in their favor for that daily higher low to be set. Biotech sector, solid bounce today. A lot of work to do. Hourly time frame, needs to change the trend bullish, which we failed to do at the end of the day, and that's notable as well for QQQ. Look at this double top rejection. It got wild at the end of the day, but high of the day, failed the high of the day by 5 pennies, big drop into the close, and then a monster 5-minute green candle to save that close and keep that double top relevant and key for tomorrow. But the biotech sector needs to change that hourly trend as well by breaking the high of today tomorrow. If we do, we zoom out. And in my opinion, anything under 148.39 would be a daily lower high. There is a little resistance level at 135.85 to be watching. But again, the bulls have to set up the daily trend change. Bounces are great, but as QQQ and a million individual names showed us, bounces alone are not enough. Big bounce, no follow through at this point. And bulls are working on the follow through now. XLV, XBI, SMH. So SMH, a little bit of a pullback today, very similar to QQQ. Looking for a daily higher low, anything above 224.41. And then the bulls need to break 241.70 and 242.58 to confirm the daily trend change, confirm the weekly higher low, and then try and be looking back at that all-time high. So TAN, bull move today. TAN held the low and broke that little high of resistance. And that level is 88.11 that broke. And now we're looking at resistance of 92.68. And from the weekly perspective, trying to get a bounce going. Shout out to Dinsey, because her pointing out that solar was standing out bullishly correlated to QQQ. She pointed out this morning in the chat room. That helped me re-enter Tesla and have some really nice day trade gains there, which I'll talk about here towards the end of this video. But that was one of the clues, and there were a bunch of clues that had me keeping an eye on Tesla bullish this morning. So MSOS had another big red day and a bunch of negative headlines around one of the stocks, GTBIF, in the ETF. So that led to that weakness. After exiting everything yesterday in the 42s, starting to nibble back. The daily RSI is getting oversold. I'm watching for these headlines to potentially lead to a bit of short-term capitulation. And just looking to play the daily oversold bounce and ideally scale out once that bounce gets going out of half of my position and try and position myself with a nice break-even swing position looking for a monthly higher low. But obviously there is no sign of that whatsoever. We ended the day with a potential hourly bear flag, and I'm going to be very patient scaling into weakness. If I'm going to make another entry into weakness, it's going to have to be down in the 37s. And again, just looking to scale in for the daily oversold bounce and then scale out once that daily bounce starts to get going. Very patient. The VIX has been sideways on the daily, not really giving us any info, and that remains the case. Again, the VIX bulls aren't going to go anywhere notable without all of our sectors seeing weakness at the same time, and it's going to require new all-time highs and QQQ bulls to get on board if we're going to see another leg down. The dollar has been leading the way to the upside in a big way. This is a very notable bull move, but if you look at the daily RSI and scroll back historically, we don't stay over 70 long. The longest we did was during the March dump. Aside from that, you can see just going back years, it doesn't stay over there very long. And if you go back and look at the 4-hour RSI at 80 today, it doesn't stay there very long either. Again, the last few years, it very briefly touches 80 and then pulls back. So long story short, we're due for daily consolidation with plenty of space for a daily higher low. And we know that if the bulls lose momentum and set a monthly lower high, that's right now what everybody wants to see happen. The Bitcoin bulls are hovering right under the all-time high. They want to see the dollar set a monthly lower high. The metals bulls are getting crushed, which we're about to look at. They want the dollar to top out. And of course, the broader market would benefit from the dollar topping out as well, in my opinion. So I'm looking at the resistances on the monthly EMA resistance, but more importantly, 94.30 and 94.74 key monthly resistance levels. Even if we do reject, again, been highlighting the potential of a monthly inverse head and shoulders pattern, and if the bulls change the monthly trend, it will be continually notable. But first things first, have to top out on this monthly, and we're not going to do that until we lose the weekly higher lows, and we're not going to do that until we lose the daily higher lows, and we're not going to do that until we pull back and set a daily higher low, anything above 91.30. bulls have a lot of space to work with on a lot of time frames. Gold, leg down and testing support. So we saw the 4-hour pattern that we had been keeping an eye on with the clear bear break yesterday. This is clear bear follow through. If 1676 breaks, it's a weekly bear flag confirming. And I'm watching at this point this daily pattern where essentially we touched it 4 times on the way down. And even if we do break 1676, that level, that downtrending support line will come right after. And as far as a downtrend resistance line, I'd be watching this. This is the pattern on the daily time frame. It's a falling wedge, but it could take a couple weeks to play out. But I'm keeping an eye on this daily falling wedge. And my game plan is shifting, where initially I had small swing positions in my IRA, and those have been red recently, obviously. But they've been small enough where I have been able to offset them day trading. And my account the past couple days is continuing to close at all-time highs because of my day trading. So the downside in the swing has been offset. That being said, I am, rather than selling because my stop would trigger on the support levels breaking, I'm thinking of increasing my position sizing because at this point in time, my IRA has way more cash than I want, and I don't have anything that I'm looking to buy because I don't buy anything long-term unless there's significant fear. And I have my SPY long-term no touch from a year ago due to significant fear. So now I'm looking at metals and saying, okay, well, I can either stop out of my small positions and eat those losses, or I can start putting the significant amount of cash that's just sitting there and I'm not using it because I got all the cash I need in my day trading account for what I do on a day-to-day basis. And I'm going to probably start putting it to work. And I'm going to add entries on SLV and GLD and look at this as a long-term, many-month play. Now, normally, if someone is saying, I'm going to disregard my stops and I'm going to start averaging down, it's a huge red flag. And I'm well aware of that. But again, it's just the fact that these positions have been small and I've offset all of their unrealized losses that I am now going to readjust my game plan because I'm looking for capitulation in the metals. And I'm starting to see, you know, on social media, some significant pain, some significant fear, and it's just doing what everybody didn't think would happen as far as the silver squeeze bulls and the metals bulls coming off that all-time high. And really, another thing, look at this 2-month chart. This 2-month chart on gold is just fine. And I would be scouting a higher low, watching EMA support, that falling wedge coming into play as well. And again, the risk is that I obviously average down and gold just keeps pulling back and we drop down into the 1500s. And that is a possibility as to what could happen. But I believe I'm going to be making a longer term play, increasing position sizing and exposure to the metals. And essentially, it's just me trading dollars for metals while the dollar is extended on the daily time frame and the metals are extended on the daily time frame. And that's a trade that I am willing to take. So I'm going to add to GLD and SLV here. And then if that support line comes into play on bear break follow through down into the mid 1600s, I will add if the weekly RSI gets down to oversold. And again, you look at the weekly RSI on gold, it doesn't stay oversold very long. Even in the big multiple year pullback bear market, you know, we did drop down into the 20s a couple times, but those did lead to significant weekly bounces when that weekly RSI got oversold. So that's my game plan. Maybe it'll come back and bite me. But again, it's really the fact that my account's at all-time highs that I'm willing to increase some risk and exposure in the metals while fear is high. Silver, and I'll keep posted on what I'm doing in the metals. But for now, increasing position sizing. And with where I started these position sizing, you know, the amount of cash I had pretty much 300% more cash than what I have for my metals positions. So putting that cash to work. I'm watching silver, which is much weaker than gold recently, but I'm watching the 12-hour. And it's a similar falling wedge-like setup, depending on where this 12-hour candle closes. But this is what I'm watching on silver. Actually, I don't like that resistance line. I like it like this. So I'm watching this on silver, but the gold one's really what matters more for me on that daily longer term time frame. Silver's still in a monthly uptrend. You know, you look at the monthly time frame for silver, and bulls are all right as long as we hold 21.89. That being said, I'll be cautious of a monthly lower high next time we bounce for the head and shoulders possibility. But I think I'm going to increase some metals exposure, put cash to work, and watch for a play on a weekly oversold bounce. And if we get bounces with some follow through, I will definitely scale out into strength to make my break even better. So just a longer term mindset type trade in the metals. Miners, bear flag confirmed. So that strong close yesterday, you know, was unusual. Are we seeing some kind of clue? Clearly not. Gap down open after the strong close. Bear flag confirmed on the daily. And just like that, we're looking down at 30.64 weekly support. The bulls would have to hold 30.64 and break 34.48 to shift momentum. Otherwise, it's going to be a similar falling wedge-like setup, which is a lot less clear because there's a lot less data, because it's a lot less trading time. So it's not going to be good to draw. But look at the 2-month time frame for the miners. Again, low to the high, massive move. Definitely scouting a higher low. And we've given back, it looks like about 50% retracement. Yep. Oil. Watching the pattern of a higher low every day because we know the bulls need to change the daily trend back in their favor to set a weekly higher low. Just like XLF and all the laggard sectors looking for a weekly higher low, oil is looking for that as well. So I would need to see oil top out, lose the pattern of a higher low every day, hold the low of 57.29.25, 57.25, and then we have to break the high of the bounce to confirm the daily trend change and convincingly set the weekly higher low. So that's what I'm looking at from here, looking for the bounce to top out, and then bulls have to prove a daily higher low to us from there. Natural gas. Bulls started the morning strong, but gave it all back, which is keeping this daily trend change weak. And it's keeping the weekly bear flag absolutely alive. That's a weekly bear flag. Burden of proof is on the bulls to get up into the 270s and 280, really, to try and negate it. All right, so we'll see how the metals go. Again, I'm going to continue to post and check in on what I'm doing, but for now, it is averaging into this weakness with cash to spare for weekly oversold conditions. And again, just looking at historical levels and not wanting to exit a small position to have my IRA go back to 80% cash, I would rather put that cash to work during times of some notable fear. And for me, the metals are starting to get towards some notable fear. So Tesla, why was I watching Tesla bullish today? Number one, bear break yesterday, lower low with zero follow through. $3 bear break. So what does that tell me? Keep an eye out for a falling wedge. And this morning pre-market, and again, this is all part of my game plan and laid out the game plan and posted this falling wedge pre-market well before the bell rang and just the setup that I was looking for. And it was this hourly falling wedge. I was looking for the bulls to defend the low of March support. So, okay, hourly falling wedge. And I was watching QQQ's low of yesterday. What I wanted to see was QQQ hold the low of yesterday and start a bounce. And obviously we didn't get that, but Tesla bulls didn't need it. So I made a mistake, and I fixed my mistake. So my initial mistake was Tesla entry around 597, 598 on this initial drop. Because we defended the low of yesterday. It was a double bottom with the low of yesterday. So made that entry, and I saw this bounce, and I was not liking what I was seeing. Saying this bounce is not significant or convincing enough. Essentially, I made my entry, and I wanted to exit half over 600 to be in a risk-free trade. And the fact that we couldn't get to 600 was a red flag to me. And when I started seeing that red flag, I exited half of my position, essentially break even, maybe lower by $1, to cut my risk in half. And then I set my stop at 592. So I stopped out at pretty much the low of the day from my half position. And if it was a full position, that stop out would have been enough for me to probably give up on Tesla for the day. But because I sold half, pretty much break even, that loss on the 592 stop out was pretty much a 15 to 20% day loser, which is no big deal whatsoever, which keeping that loss small kept me looking to play it again, to play Tesla again. So then I saw enough of a bull move, and then Dinsey in the chat room posted, hey, the solar sector is seeing bullish correlation for QQQ. And the whole time I'm watching for bullish correlation in our EV names. And it started to show up right here at 10:04. So I re-entered at 598, higher. That's 1% higher than where I stopped out. Why was I willing to do that? The falling wedge clue, because again, the bear break with lack of follow-through kept the falling wedge alive. Solar sector, relative strength versus QQQ. NIO was starting to see some relative strength versus QQQ. Sam in the chat room posted the headline of $250 billion. What was it? U.S. automakers commit $250 billion, blah, 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 whatever. That started to increase some bullish correlation. And I feel like there was one more. QQQ, at that point in time, was bouncing enough off the low of the day to set up a potential 5-minute trend change attempt. So that was about right here. Saying, okay, new low of the day, but a decent bounce as well. I know we're positioned well versus QQQ, and if the QQQ bulls can show up, Tesla is positioned really well to have a solid bounce on the day. And so we got the follow through. And obviously here it was okay, dead on right, big time bull follow through, exited half of my position into that bull move. I was going to swing half of my position, but at the end of the day, you know, I sat through this hourly consolidation. We set an hourly higher low, looked great for the bulls. Hourly trend change confirmed into the close, but I did sell at the close. And the reason was QQQ double topped at the high of the day and dumped. Now, granted, the last 5-minute candle on the day saved it from looking ugly, and we can definitely see continuation tomorrow. This is just me being conservative and locking in gains and not wanting to care about what the futures do overnight tonight and wanting to start tomorrow with a fresh, clean slate. So for me, just locked it in with a really nice gain, and I didn't do a whole lot of other trading today aside from that, and that was enough to, again, offset the metals weakness in my account and keep that account at all-time highs. So when the metals do bounce, that should help the account easily see some new all-time highs because, again, I'm just constantly offsetting metals weakness on a daily basis and doing so well. And from there, Tesla is going to be watching for daily bounce follow-through. Next level to clear is 645.50, and then we're looking back up towards the high of the bounce. If you pull up the 2-day time frame on Tesla, you can view it as low of the dump, high of the bounce, higher low is shaping up if we can get some follow through tomorrow, and then we'll watch for the potential of a lower high compared to 718, the top of the bounce, to tighten up a little bit more. I can't believe earnings are already coming up. I guess that's a month away. So nice bounce in the EV names, nice bounce in the solar names, relative strength versus QQQ. And that for me is becoming a major part of my day trading. Recognizing shifts. I have easily recognized that Tesla and NIO have had a bearish correlation to QQQ for the last couple weeks. It changed the day that NIO gapped down and had a really nice bounce, and that was probably my best day trading day in a couple weeks. And then today was one of my best day trading days since then, and it was the same thing, just recognizing relative strength against the sector ETF and playing in the direction of that relative strength. So Tesla bulls, you know, there's nothing wrong with swinging that close. It was a perfectly fine close. Again, I was just being extra cautious. I love starting the day with a clean slate, and I love not thinking about the charts once I stop recording this video until tomorrow morning. So I hope you're well. Do good things. We'll see how the metal plays out. But again, I'm pretty confident that a weekly oversold bounce in gold will get some decent follow through. So I am okay scaling into weekly oversold conditions with IRA cash that otherwise is sitting there and not being touched. It's collecting dust. Do good things. We'll see you tomorrow. This is prime time for the magnolia. We've got another frost coming in just a couple days, and these buds will probably start dropping. I let everything from the fall garden and the greenhouse here go to seed, or go to flower at least. The onions are still going, they'll be good. But everything else I'll just let go to flower and then pull it all up. Probably won't do anything in here until next fall. We've got more mulch to go. It's going to go in the garden. We got to weed the paths. And the soil that's in the paths is going to be real good soil after a few years. And maybe when these beds fall apart, I will move new beds into the paths and swap things out. But that's looking 5+ years down the road. Tulips are starting. I was 6 beers deep and trading on my laptop. Went over the edge. Bad news is I took out a bush. Good news is it was a perennial and I need a place to put a fig tree that's in my room. So that's where it's gonna go. We'll see how I get it out. Can't tow it. We'll update.